Bang! Welcome to Cryptocurrency Blockchain News, your daily cryptocurrency blockchain aggregated news show on YouTube. Look, it's going to be drinking. Look, it's going to be smoking. Look, it's going to be swearing. Look, you've been warned. So look, here I come. In 3, look, 2, look, 1. Bang! Welcome, everybody. Black, white, gay, straight, Christian, Muslim, Jew. Welcome. My name is Shomari Clarke. Welcome to Cryptocurrency Blockchain News, the greatest show on earth, the greatest show in the multiverse. Greatest show in the daggone multiverse, and we have a great show for you today. Bang! Yes, indeed, folks. I know. The markets took a big hit. Don't worry, I'm going to explain it all to you right now. So let's just begin. How we begin by telling you what we're going to talk about. So, first story, Aave launches Aave Arc. And 30 institutions are ready to join this. We're going to talk about that. And then, we keep track of the ETFs. So another ETF was delayed here in America. We're going to talk about that. And then the big deal. This is why the market's tanked. And I'm going to explain it to you. The Fed FOMC meeting report came out yesterday. Yeesh, the markets didn't like it. And the traditional markets, which is why crypto markets got thrashed. And then we're going to do the shout-outs and daily summary as usual. So let's begin, and we begin with a bang. Let me head on over here and we do a little bit of look. Bang. All right. Yes. All right, and then we do a little bit of look. Refresh. All right. Price of Bitcoin, $42,123. Fuck. And when I left you last time, we were at $46,769, so we have gone down. $4,646. Down $4,646. All right. So look. All right, top 10 of the day, folks. You know who they are, the usual suspects. Top 10, Bitcoin, Ethereum, Binance Coin, Tether, Solana, USD Coin, Cardano, XRP, Terra, and Polkadot. But, all right, let's look at market moves of the day. Well, obviously, it's single to double digits down. But we'll just say the usual. Single digits up, single digits down. You never know, there might be someone up in this market. I'm assuming the only thing in green will be stable coins, but we'll see. Single digits up, single digits down. All right, the whole market's blood red. Single digits up, single digits down. Oh, Phantom bucking the trend. Single digits up, single digits down. 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 Oh, well, it's just fucking straight down. Let's get real. All right, down. All right, let's just go to the usual. All right, let's just stop with those games there. All right, top 10 losers of the day. If you see anything here you like, go get it. It's on sale, just like the rest of the market. It's a big old sale. Just remember, do not worry about prices yet. Until we get regulatory clarity, just accumulate. These are big sales going on here, and you want to take advantage of them. All right, top 10 losers was Theta Network, SushiSwap, Tezos, Helium, Loopring, Velas, Elrond, Aave. Really, after what I'm about to read? Yeah, that's why you know this is dumb money right now still. I'm about to read to you about Aave onboarding 30 institutions. And it's down 11% today? Yeah, this is some fucking dumb money. Uniswap and Cello. So, look, don't worry about the prices yet. When smart money gets here, things are going to behave properly. It's not going to be just because Bitcoin goes up, everything goes up. Or just because Bitcoin goes down, everything goes down. It's not going to be like that when they get here. All right, let's see top 10 gainers of the day. I'm assuming stable coins. As I suspected. All right, top 10 gainers. Ape NFT. Decentraland, Phantom, Terra USD, DAI True USD, Binance USD, Pax Dollar USD Coin, and Tether. All right, let's look at the total market cap. We're still above 2 trillion. If that's any consolation. All right. Total market cap is $2.061 trillion. When I left you yesterday, we're at $2.248 trillion. So we have gone down substantially. $0.187 trillion. All right, let's look at the 24-hour volume. right? All right, 24-hour volume is $138.9 billion. When I left you yesterday, we're at $90 billion. So we've gone up in volume, $48 billion. All right. Look, let's get to the stories. All right. All right, let me get a sip. Aave launches its permissioned pool, Aave Arc. Aave launches its permission pool, Aave Arc, with 30 institutions set to join. So that's what I was just complaining about. You got 30 institutions ready to join something. Really? And it goes down today? Are you fucking kidding? Dumb money. Right? If this were the regular stock market and someone came out with news like this, boom! They'd be flying today. That's the problem. Bitcoin goes down, everything goes down. Bitcoin goes up, everything goes up. Right? The market is coupled to Bitcoin. Once we get clarity in the institutions in here, the market will decouple. It won't be like that anymore. You know, it'll be like the regular stock market. Yeah, if the good news comes out, your product will go up. Bad news comes out, it'll go down, you know. All right, though. Let's go. So, decentralized lending platform Aave has launched its permission lending and liquidity service, Aave Arc, to help institutions participate in regulation-compliant decentralized finance. So, regulatory-compliant DeFi. Well, and you know, obviously, well, institutions are going to be in for it as long as it's regulated. Absolutely. So, as opposed to its permissionless cross-chain counterparts on the platform, Aave Arc is a permissioned liquidity pool specifically designed for institutions to maintain regulatory compliance in the decentralized finance space. So, bang, it is being built for the institutions. So, when regulatory clarity comes, bang, these guys, I mean, they're all going to pile in here. So, the first of 30 entities lined up for the whitelist for Aave Arc was Fireblocks, the institutional digital asset custodian. It explained in a Wednesday announcement, the pool enables whitelisted institutions to securely participate in DeFi as liquidity suppliers and borrowers. Users of Aave Arc must perform due diligence procedures such as Know Your Customer, anti-money laundering, and KYC and AML, in order to gain access. So FATF compliance, Financial Action Task Force compliance. Fireblock also serves as a whitelisting agent for Aave Arc, ensuring other institutions that wish to join the permissioned pool perform KYC AML requirements. Aave cannot perform this task itself because it is not a regulated entity, such as a bank or other traditional financial institution. As the whitelisting agent, Fireblocks has already approved 30 licensed financial institutions to participate in Aave Arc as suppliers, borrowers, and liquidators. Among some of the whitelisted entities are Anubi Capital, Canvas Digital, CoinShares, GSR, and crypto yield aggregator Celsius. Aave's new permission liquidity pool aims to onboard more institutions to the burgeoning DeFi space that has $133 billion in total value locked as of the time of writing. That TVA has grown 4.5 times since January 10th of 2021, according to DeOperator. So while institutions begin purchasing cryptocurrency in increasingly sizable portions in 2021, most remain skittish about dabbling in DeFi due to compliance hurdles and regulatory uncertainty. All right, so bang, of course, you know, they're not getting in yet because of what we've been talking about. Why? The hurdles of regulatory uncertainty, right? That's the only reason. Everybody wants into this space, whether it's DeFi, just buying regular, vanilla, whether it's making funds out of this stuff, whatever. It's the regulatory uncertainty. And that's why we're waiting for regulatory clarity. Clarity. In other words, there will not be uncertainty. There will be certainty. There will be clarity. And so that's what we're waiting for. And it's going to come this year, guys. But this is great. So Aave hodlers, great stuff. And this is, and it's not just great for Aave hodlers, but just great in general. I like to see that someone is coming out with some regulated stuff already so that they're waiting. They're waiting for these institutions to arrive once we get the regulatory clarity that's needed. So Great stuff, great stuff. Which means, and I guess what I want to say about that is, it's good to see that guys are already building regulated stuff so that once these guys are allowed to come, all right, well, there's already a place for them to come play. We're not going to have to wait for someone to design and build something for them to come into DeFi or build something for them to do whatever. Some of these things are going to just be here waiting for them. Like, hey, guys, we've been waiting for you. Come on in, right? So great stuff, Aave. Thank you. And Aave hodlers, bang. All right, and then here's the usual. Now let's get to the next story. Bang, Bitcoin ETF decision delayed. SEC commissioner wonders why. So, look, you all know the ETF story and stuff like that around here, so we're not going to get into it all. I guess this is NYDIG's Bitcoin ETF. They're delaying it, so it's not denied. It's just delayed. And, all right, let me get a sip, and then we'll get into it. All right, let us proceed. So the United States Securities Exchange Commission, SEC, has postponed its decision to approve NYDIG's spot exchange traded fund. Oh, spot market fund. Okay, I see. Okay, so it's a spot market exchange traded fund for Bitcoin, delaying until March 16th. In a notice published on Tuesday, the SEC found it appropriate to designate a longer period within which to issue an order approving or disapproving the ETF. Upon the news, BTC's price didn't flinch, remaining in its tightly coiled range under 47,000. In a promising turn of events, an SEC bigwig has been vocal in support of a spot ETF. While crypto enthusiasts are used to rejections and delays in Bitcoin spot ETFs, SEC Commissioner Hester Peirce, Crypto Mom as they call her, also wondered why it's taking so long. In an interview with industry media, the commissioner said, "I can't believe we're still talking about this," as if, we're waiting for one to happen. We've issued a series of denials even recently, and those continue to use reasoning that I think was outdated at the time. All right, so Hester Peirce, she's a commissioner of the SEC, and she's always been on the side of crypto. Well, ETFs, right? She's always said, what's the problem? Yeah. So, hold on, let me get this up. So, whoops. The NYDIG first proposed an ETF on February 16th last year, while the most recent deadline for giving a thumbs up was January 15th. Where were we? U.S.-based investors can gain exposure to BTC through Valkyrie's latest ETF offering, or through the popular ProShares BTC Futures Contracts Fund. However, investors still covet a way of gaining direct exposure to the asset. Across the border, Fidelity Capital launched a Bitcoin ETF and mutual fund in December, while Brazilian and Latin American investors can go tap into BTC spot ETFs. Right? So they're already out there, right? And so I should say this for new people. The reason the SEC is not approving a spot ETF is they say, well, it could have market manipulation. Okay, and they've approved futures Bitcoin ETFs. Well, futures are based on the spot market price, right? So if you manipulate the spot market, you're still manipulating the price of the futures. So that's a bunch of bullshit. You know what I'm saying? Let's get real. So it begs the question, when will a spot ETF land on U.S. shores? With over 21 Bitcoin-related ETFs awaiting approval or rejection in the U.S., according to ETF.com, surely 2022 will be the year. Well, we'll see about that. I guess it doesn't make sense. Well, we're not going to let the spot market, we're not going to approve a spot market one because the spot market price can be manipulated. Well, futures contracts are based on the spot market price. So, the futures contract doesn't magically stop manipulation. You see what I'm saying? So that's a nonsense excuse. All right, but anyways, there's another delay, guys. You know how it goes. Hurry up and wait. All right, so let's get to the meat of the story. Bitcoin falls to 42 grand after Fed FOMC meeting. Reports show commitment to decrease balance sheet. So, all right, it's going to take a little explaining. So, since COVID hit, we've been in something here in America. It's called quantitative easing, or QE for short. So QE is the Fed Reserve prints money, but not only do they print money, but they actually buy assets, right? They become the biggest buyer of assets in the world. And they actually put it on the Fed's books. Regular assets. Like, they'll buy gold, they'll buy silver, they'll buy Microsoft shares, Apple shares, they'll buy bonds, right? Just like you and me buy, they buy it. And they put it on their balance sheet. And that helps prop up the market because they're pumping liquidity into the market, right? And giving easy credit, right? That's why when the interest rate is way low, it's easy to get credit, right? Sorry. That's not the way to say it. But the interest rates you pay on some sort of loan you get go way down, are way down. Now, when the Fed Reserve starts to unwind quantitative easing, as you can see from right here, here's the title. They have a commitment they're going to decrease their balance sheet. So like I told you, the Fed Reserve actually buys assets, market assets. And so they're saying they're going to sell them. They're going to stop buying so much. And not only that, but they're probably going to raise interest rates because here in America, inflation is happening. And, we want inflation, but healthy inflation. Healthy inflation is 2% a year. That's healthy. Above that, now you're getting into, now you're getting into darkness. Not darkness, but like you see right now, the prices of stuff are going up here in America. Right? And that's not the good inflation that you want. You don't want the actual prices to go up. You just want the dollar to weaken a little bit. Not enough that the prices go up, but just enough that it keeps us in a nice space, right? Europe and America, they fight for 2% CPI. Right, 2% CPI. That's the Consumer Price Index. In other words, that tracks inflation. And so with what the Fed said, quantitative easing is over. Well, that means the dollar is probably going to strengthen. Yeah, that's not good. I know what people think. A strong dollar is strong America. It doesn't work like that, you fuckstick. When our dollar is too strong, that means American products cost more to buy, right? A man in China who wants to buy a $20,000 Harley Davidson, he has to convert his money to American money to buy that Harley, right? And so, all right, let me just give another example. Someone wants to buy Harley Davidson. I don't care what country it is. So the currency, here's the Harley in America, and here's whatever country that person is in. Now, if the Harley Davidson is $20,000, but this country's money is 2 to 1 to the dollar, meaning 2 of their dollars equal 1 American dollar, that means it's going to take $40,000 of this country's money to buy the $20,000 Harley. Correct? All right. So now when the dollar goes up, now maybe it turns to 3 to 1. The dollar gets powerful, and this country's currency is now 3 to 1 to the dollar. So that $20,000 Harley Davidson now costs this person in this country $60,000 of his dollars or her dollars of that country's money to buy that one $20,000 American dollar Harley Davidson. Yeah, well, sales go down, right? When the American dollar goes up, obviously we're not exporting as much because people can't afford our products, right? They can't afford what's made here. So that's one thing that's bad about the dollar being strong. Right? It just, okay. And the other thing is, sorry, I almost forgot there. You have to remember that most commodities are priced in dollars, right? So a barrel of oil, this isn't true. I'm just going to make up a number. Say a barrel of oil is $100. Yeah, it's 100 American dollars. So again, let's look at that country. The same country, they want to buy oil. their dollar is 2-to-1 to ours. In other words, 2 of their dollars equals 1 American dollar. Yeah, but when the dollar goes up in value and oil is priced in dollars, so now imagine oil is 3-to-1 because it went up and the American dollar went up. So now it's 3-to-1 to the dollar. So it cost this country $300 to buy that 100 American dollar barrel of oil. So it's like a tax on the world. It's a slowdown. And now you have to think of all the commodities in the world. Oranges, pork bellies, soybeans, whatever the fuck it is, gold, silver, whatever. It's all priced in dollars. So when the dollar rises, it's basically making all those things more expensive. Right? The price of oil is still $100, but it's 100 American dollars, which just went up in value. So you in your country over here, you used to buy that $100 barrel of oil for $200 when your currency was at 2-to-1, but now your currency's at 3-to-1. So now it costs you $300 per barrel. Do you see? And so the markets don't like that, right? We don't want a strong dollar like that, right? And well, the world doesn't, because everyone's got to buy oil. Yeah, well, it's priced in dollars. And so that was kind of a shock to the system yesterday when the FOMC meeting report came out. And so everyone's recalibrating now. Everyone's recalibrating for a stronger dollar down the road. And so that's why we saw the sudden outflow of money from crypto. And also, not only that, but the Fed Reserve is going to give its interest rate numbers in March. So everyone's kind of just waiting till then. I mean, people are still market positioning, but March is going to show us a lot. I mean, that's the interest rate numbers are going to come out. And so, okay, so that's what happened yesterday. Just boom in the crypto market because everyone was like, oh, no, quantitative easing is ending. Now it's quantitative tightening, right? So, all right, so now you get it a little bit. I mean, it's very complicated, but I hope I explained at least enough so you can understand a little bit. So as the price of Bitcoin hovers just around 43,000, the cryptocurrency community is buzzing with expectation. This is due to the sideways price action following Federal Reserve commitment to decrease its balance sheet. So decreasing the balance sheet, like I said, they buy quantitative easing is the Fed Reserve buys stuff and puts it on the Fed Reserve's books. Yeah, like the Fed Reserve owns Microsoft shares. They own Apple shares. Yeah, right? They're just like a regular investor. But of course, being the Federal Reserve, well, you're the biggest, most powerful investor in the world, aren't you? Plus, you can print your own money to buy more shit if you want to, can't you? Right? And so that's why when they leave, it's a big deal. This is due to the sideways price action, blah, blah, blah. So Bitcoin and crypto market crash. The price of Bitcoin fell below 44,000 shortly after the Fed Reserve's December FOMC meeting notes reconfirmed efforts to regulate the balance sheet. Right? They're not going to pile in on the balance sheet anymore. So after minutes from the Federal Reserve's December FOMC meeting revealed that the regulator is dedicated to reducing its balance sheet and hiking interest rates in 2022, Bitcoin and the wider cryptocurrency market plummeted as stock markets pulled back at the closing bell. So what happened yesterday was not just obviously in crypto, it was the whole world, right? The markets tanked around the world. Okay, so Bitcoin's price dropped to 43,000 as stock markets corrected. This triggered a wave of liquidations that totaled 222 million in less than an hour. According to TradingView data, Bitcoin was struck by a wave of selling that pushed the price to an intraday low of $43,717 after bouncing around support near 46,000 for a few days. It is expected that the Fed will begin raising its benchmark interest rate in March, which would mean that balance sheet reduction could start before summer. So you see, it hasn't started yet. So, but people are positioning themselves for it to happen. Everyone thinks it's going to happen. They think they're going to raise interest rates, right? Which makes loans more expensive. Raising the interest rate strengthens the dollar, right? And like I told you, well, when the dollar is strong, all those commodities become more expensive. All American goods and services become more expensive to foreigners, right? So that's how it works, okay? Okay, that's how it works. So, blah, 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 erect capital foreshadows similarities. What are we talking about here? The chart below was posted by crypto analyst and pseudonymous Erect Capital, showing the many similarities between this Bitcoin range in May 2021. All right. According to Erect Capital, both saw BTC consolidate inside two bull market EMAs, i.e. green 21-week and blue 50-week. If Bitcoin is to repeat history, a capitulation event could take place where Bitcoin briefly deviates below the blue 50 EMA. All right. We're not going to talk about the charts. That's a bunch of bullshit. The SEC of the United States postponed its decision. Oh, we just read that about NYDIG. All right. So anyways, so this didn't actually really explain much. So I'm glad I actually took the time to explain it to you. So that's what's going on. They are decreasing the balance sheet. And the thought is that in March, they're going to raise interest rates, right? Which will strengthen the dollar. So, everyone's getting prepared for the shock. Everyone's getting prepared for the shock of that. But it's not guaranteed. I mean, maybe they don't raise interest rates, right? But you can see from the meeting report, sorry. So there's two things here. There's two things we have to talk about. The raising of the interest rates and the balance sheet. They're two separate things, but both of them make up quantitative easing. Okay, so there we go. That's the better way to say it. So, we don't know what they're going to do in March, right? It sounds like they're pretty much going to, decrease the balance sheet. You know what I'm saying? That sounds kind of pretty much like a for sure thing. But we don't know if they're going to raise interest rates. That, the interest rate prices hit loans, consumer loans, home loans, car loans, business loans, whatever, loans, just loans. And so, obviously when there's less, people buy more homes when the interest rates are low, right? Because, you're buying this home, you got a, 20, 30-year mortgage on the thing, right? So the interest rate is a big deal because it's a long-term investment you're making, 30 fucking years, right? So, and, so that's a part of it in that when you raise interest rates, people say, maybe I don't buy a home right now, right? Housing is a major driver of the American economy, right? Consumerism and housing. And so if all of a sudden people put on the brakes, hey, maybe, they raise interest rates, maybe people go, oh, man, I'm not going to buy this house now because I'll be locked into a higher interest rate. Maybe I'll wait to see if the interest rates go lower. You know what I mean? So it can fuck up housing, right? Or just any loans. I mean, it's not just housing. It's business loans. You're a business and you want to upgrade. I don't know. You're a restaurant and you want to upgrade your kitchen. So you want $100,000 loan to buy new stoves and fridges and shit that's in a restaurant kitchen, right? Yeah, well, when the interest rates are fuck all, pretty, because they're almost at, interest rates are almost at zero in America. So I mean, when they're like this, when you take out $100,000 loan, you're only going to have to pay the bank back like $101,000. You know what I mean? Whereas when interest rates go up, it might be $105,000 or $110,000. Like that. And so that's how it works, guys. That's how markets work. It's all intertwined. Everything's intertwined. The cryptocurrency market is not in its own island anymore. It's becoming part of the real markets. And so what happens in the real markets affects this place now. When people go risk off in the markets, well, you saw what happened about 3 months ago. They went risk off. What happened? Look, we flew down. That was risk off. Now, this is not risk off. So I want to explain that to you. This is not a risk off scenario. This is people repositioning their money, right? And you know what I'm saying? This isn't risk off. In fact, anyway, I'm not going to get into that. Yeah, it's not risk off. It's a repositioning of the money. And so that's what we've been hit with. And like I said, the Fed Reserve is going to come out with their numbers in March. So, we're all waiting for March. That's the key. And so I guess what I want to tell you as well is don't expect this market to start flying till March, which is good for you because now you can accumulate, Buy at these really, really dirt cheap prices. Remember, this does not affect the future of crypto. Shomari, is crypto done? Of course not. Fuck's sake, it's a brand new asset class. These companies are viable companies. They're onboarding. They're making money. The ones we invest in on this channel. So that's not going to change anything. And like I told you, it doesn't really matter because these guys can't come get our stuff anyway yet until we have regulatory clarity. Regulatory clarity. And I mean, I preach it on here. And like I've told you, once we have clarity, well, like this guy just told you, right? The Aave guy. Or someone in Aave, right? What did he say? Where was that? Anyway, I even banged it. Hold on. Anyways, though, right? That's what this guy said, right? Aave is preparing a regulated investment vehicle here, DeFi. Where was that? Oh, there it is, right there. Right. So that's the hurdle, is the regulatory uncertainty. In other words, waiting for regulatory clarity. And so what I want you to understand is that don't worry about the prices. I've said this on this channel from the beginning of this channel. Do not worry about the price of anything yet until we have clarity. And as long as you're invested in revenue generating product, revenue generating companies, Stellar, Chainlink, look at this, Aave, fucking Polygon, IOTA, VeChain, companies that are actually already making money. You don't have to worry about that. As soon as the up and down, I know it's depressing. Sometimes it's depressing to watch. Sometimes it's pure bliss and euphoria, right? You're watching your holdings going up and down daily. I know it's tough. It's tough. I understand. You guys aren't used to that kind of thing. I'm a Forex trader, so I'm used to shit like that. But I know as a worker bee, you're not used to watching your money going up and down like that, right? So I just want to give you confidence that don't worry. First of all, don't worry. This is not risk off. The big boys aren't going anywhere. They're just repositioning their money. So when they get clarity, all right, they'll come to the space. You see what I'm saying? Don't, oh my gosh, crypto, it's all over. It's the end of it. Of course, it's not the end of it. These companies are just beginning. These companies are like 3 years old and they're already making money. So, and listen, everybody invests in winners. So those big boys, smart money, they'll be here to invest in the winners. So don't worry right now, right? Don't worry right now. I know it's tough. Just keep accumulating, though, revenue generating product. And, like I said, when regulatory clarity hits, then we're going to get a flood of institutional money, what I like to refer to as a tsunami of money coming to this space. And, that's how it's going to be. So don't worry about it right now. I've said it on the beginning, from the beginning of this channel. We're waiting for regulatory clarity. Then we'll start worrying. Then things will get more serious. Things are going to get more serious then. But for now, don't worry about it, guys. Everything is A-okay. All right, let's get to the shout-outs. Bang! Fucking Twitter, man, messed me up. So I'm sorry, guys. Look at Twitter. It's not letting me. Look at it. It's not showing me. Like, this is it. Right? All under here, where all your other comments and likes and stuff are, it's gone. They're not showing me that anymore. So I just got to give bangs to whoever's here. Right? You see that? Right? It stops right there. It's fucked up. Right? All right, guys. So. Oh, actually, I could do this, though. Hold on. I can look at the likes on the thing, right? Because all of you, you liked the video, as usual, right? So let's go to the video, and I'll go to the likes. All right, there we go. There's the likes. There's everybody. Okay. Radster, holding down insurgency in Eastern Europe. Lever by the Sheba. Bang! Bengals fan. Victor, lever by the Sheba. Bang! Bitcoin Kong. Wow! Lever by the Sheba. Bang! Oh, I see you got Bitcoin Sol.VETN88. Look. Yeah. That's a champion portfolio. Lever by the Sheba. Bang! Deep Entertainment. Soul Brother. Levered by the Sea Brother. Bang. Bam. Connecting the dots. Levered by the Sea Brother. Bang. Wesley. Levered by the Sea Brother. Bang. Hey, drop it, son of a bitch. Look. Bang. Look. Bang. Look. Bang. Got you wrong, Cash. Dang, all right. Once again, you know how it goes, brother. Levered by the Sea Brother. No savior. Bang. Gretchable. Levered by the Sea Brother. Bang. Oh, and I like what you said in the chat room. So I'm going to say this out loud here because it's a good tip for everyone. So what this guy Grunchtable does, usually he didn't do it yesterday, which is why his NFT got sent to Neverland. But what he usually does is he downloads a wallet, writes down the passphrase, and then he actually deletes the wallet, re-downloads it, and uses the passphrase to open up a new one, to open it again. So he knows that if he wrote it down right or correct or not, right? So that's pretty genius, guys. So always do that. Download the wallet, get the passphrase, then delete that wallet, then re-download a wallet, put in the passphrase, and make sure that the words you put in were correct. Yeah, so that you copy the words down correctly. So Gertrude, once again, brother. Sorry about the NFT, but look, thank you for that great tip. Love you, but the sea, brother. Oh, and actually, speaking of a tip, here's another tip that one of the brothers gave today. Slappy. Slappy says what he does is he has an old cell phone with no SIM card in it. But what he does is he takes pictures of the passphrase on his computer. So he'll take pictures of them and leave them in this other cell phone. It's not, it's not a real phone that he uses to talk with. It's just a place where it's basically a camera. So that's another way to protect yourself, to make sure that you always get the right passphrases in case of any trouble. All right, guys. All right, Grudgeable. Love you, brother. See you, brother. Bye. All right, that's some good tips for everybody. Good tips for everyone. Keep everyone safe. Actually, I wish I had known those ones. I would have, because I have my passphrases written down, and I've never tested to see if they're actually good or not. I'm a little nervous, really. All right. But I'll be doing that from now on. I will be taking pictures of them with an old phone. I got old phones around here. So I'm going to use one as my my passphrase phone. I'm going to just, anytime there's a passphrase, just take a picture of it. Take a picture of it. All right. So, again, thank you, Grunchable and Sloppy. Sloppy, love you, brother, see you, brother, bye. I know you're not on here, but love you, brother. You know that. All right, Universal Misanthrope, holding down the insurgency in Central Europe, and the CB News master of security. Love you, brother, see you, brother, bye. Andrew Chater, the enforcer. Look, Andrew, you tell him. Especially now that the price of Bitcoin is down to 42 grand. Holy, we got a lot of weak hands here, brother. Got a lot of weak hands, Andrew. Get to work, brother. Lay down some discipline. Lay down the law. Smack some sense into these motherfuckers. Because he'll tell them, look, settle down. Settle down. We don't have clarity yet. Just keep accumulating. This juice, it's worth the squeeze. You tell him, Andrew. Love you, brother, see you, brother. Bye. Robbie Hardaway from the multiverse. Love you, brother, see you, brother. Bye. And Sir Royal Charles, Ethereum, or .eth. Love you, brother, see you, brother. Bye. Yeah, that's a sweet portfolio right there as well. Look. All right, so now we'll go back to over here. Yeah, I don't know why Twitter did that, right? Like you see, it stops. It doesn't show anything else. All right, but that's everybody anyway. All right, what's Biniam talking about? Biniam. CB News, yes, Biniam. EU regulator calls for public input on DLT for trading and settlement. All right. Bang, we'll check that out. Biniam. CB News, yes, Biniam. Visa onboards first Solana project. Is that so? To its FinTech Fast Track program. Perhaps we'll talk about that tomorrow. Bang, thank you, Biniam. Victor. Love you, brother, see you, brother. Bang. Bitcoin Kong. Wow. What does he say? VeChain to the rescue, fuck sticks. Look. Oh, yeah, yesterday, that VeChain USD thing. Yeah, stablecoin. That was nice. All right. Look. Aave launches Aave Arc that 30 institutions are going to join. Boom. Bitcoin ETF delayed. Yeesh. Boom. Fed FOMC meeting report. That's why we crashed yesterday. Boom. And if you stick on this channel and you do what you're supposed to do, your portfolio is going to look like boom. Soon enough. Soon enough. All right. Thank you, Bitcoin Kong. Bye. All right. That's everybody then. That's everybody. That's everybody. All right. Look, let's get back to the Death Star. Bang. Look. Bang. Look. Yes. All right. Welcome back, everybody. So, we had a great show for you today. Of course. They're all great. And, yeah. So, all right. So, we'll just go in order and I'll yap when I get there. So, Aave launches Aave Arc with 30 institutions to join it. And so, that is awesome. That is awesome. That is regulated, right? They're designing a regulated platform for institutions to come, right? And so here in America anyways, Bitcoin and Ethereum are the only ones that are regulated here. So sure, the institutions will only be allowed to play with those for now, but once there's regulatory clarity, well, I'm sure Aave is going to offer the full panoply. Panoply, is that the way you say it? The full buffet of NFT stuff and for the institutions, and that'll be great stuff. Or sorry, not NFT. Sorry, was it DeFi? Let me write that down here. DeFi. All right. Yeah, they're offering the full thing of DeFi. And like I told you, even here in America, the banksters, they're saying DeFi is real. And they're saying, they don't want to challenge DeFi. They want to partner with DeFi. So we'll see. We'll see about all that. So great for Aave hodlers. And just great in general. Regulated investment vehicles. So, bye. And then Bitcoin ETF delayed. Well, fuck. What else is new? We just got to wait. Spot ETF delayed. Not a big surprise. We report on them here. So, there's the report. Bang. And then finally, the Fed FOMC meeting report. And so that's what caused the big crash yesterday. Not just crypto, but the global markets. Interest rates are going to rise, perhaps in March. It looks like the Fed is pretty serious about shrinking their balance sheet. And so, it's like, the biggest guy in the room is leaving the party, right? And so the rest of the market's like, oh no, where are we going to get money? They got to scrounge around. And so this was not a risk off. It's just a rebalancing of where people are putting their money so that they're positioned for if the Fed Reserve raises interest rates. Remember, it sounded like there's two things. There's the interest rates and there's the FOMC balance sheet. So they sounded pretty certain that they're going to shrink that balance sheet. But it's no guarantee that they're going to raise interest rates. And so we just have to see till March. And so I'm going to just tell you right now, don't expect, us to bang to 60 grand, 70 grand again in Bitcoin now. Fuck no, not now. Not yet. I mean, we're going to be there again one day. I mean, fuck. But just right now when everyone's calibrating and waiting for the March interest rate. So Q1, you can pretty much write that off. And like I said, it doesn't matter because we're waiting for regulatory clarity. All right, that's going to come probably this summer and Q3, Q4 as well and stuff. So, like I said, sometimes things are not happening to you. They're happening for you. So you get to buy this stuff real cheap again. Good sales on, And so, and like I said yesterday, just accumulate before you get priced out. Obviously, when the market's tanking, you're actually kind of getting priced in, right? The market's tempting you. Come on. Buy the dips, idiot. Buy the dips. But the market's tanking, Shomari. Yeah, well, that's the perfect time to buy. That's when you buy it, when it's cheap. As long as you have revenue-generating product, as long as you're investing in companies that are valuable and doing something, eventually they're going to rise, and especially once institutions come here. So, there's a saying in the markets, BTDI, buy the dip, idiot. It's not rocket science, and so this is dipping like a motherfucker, and so just keep buying the dips. Yeah, you might buy it today. It might go down again more tomorrow. All right, well, buy more. right? Just know that as soon as there's regulatory clarity, this place is gonna behave a lot different. Boom, boom, all that to the moon talk. Like I said, you, my subscribers, we're going to the fucking multiverse, and so just keep doing that. Just as long as you've got revenue generating product, you're going to be fine. Okay. And like I said, the crypto market is now part of the real markets. So what the Fed Reserve says matters now. Now, it's not like 2018 and 19 where, it was just a bunch of retailers and cult members. Now there's more market players here. So they behave the way market players behave, and that affects our market, right? So, all right, so don't worry about it for now. But that's the reason. So now you know, well, why did it go down like that? Fed Reserve basically stopping quantitative easing. And the only question is how fast and how hard. So, all right. So look, on that note, let's chill it and kill it. Let's get you back to your wives and lives. Look, subscribe below, press the bell. You get an automatic notification when I do the show. The greatest show on earth. Greatest show. Look, in the multiverse. Look, my name's Shomari Clarke. I love talking money. Bang, I love talking crypto. Bang, this is the favorite time of my day. So thank you for having me in your home, and I'll see you tomorrow for another fun fact-filled day of crypto talk. Until then, subscribe here and press the bell. Watch that video there. Get your mind right, and I'll see you all tomorrow. My name's Shomari Clarke, and I watch the money. And most importantly, bang, I'm always on duty. Love you guys. See you tomorrow. Over and out.